And joining me now to unpack those moves in greater detail is Alex Duys from Umthombo Wealth. Alex, thanks so much for your time this afternoon. And let's perhaps start off with what you've made of trade so far this week. Banks kicking earnings season off with a bang, US banks that is, and some economic data suggesting that the US consumer and economy seem to be weathering the, economic uncertainties.
Yes, good afternoon. I think certainly the data we've seen thus far has illustrated that the consumer in the United States are doing better than feared perhaps a few months ago. I mean, specifically from the banks, they are not seeing any potential big spikes in bad debts and so forth. So, and we know, of course, the American consumer likes to spend and doesn't have a lot of savings. So that pretty much tells you that they are probably okay at the moment. They have not been squeezed yet by cost push inflation. Now, of course, the market is concerned that this narrative might change as the year progresses, or perhaps early next year. But to be honest, we simply do not know what the impact will be of the tariffs. Because remember, with tariffs, or with any economic variable for that matter, you can't just look at one specific variable and then make conclusions.
Yeah.
Economics is very complex. There are hundreds of thousands of variables at play here. Tariffs are one of it, and it'll have quite a big impact on many other variables. And as a result, that's why the market is unsure on what impact inflation will have and to what extent, and as a result, interest rates. And that's pretty much been causing the uncertainty we've seen year to date thus far, and will continue to be the case for the year.
And the uncertainty also being seen in those corporate earnings, not particularly the numbers, but the guidance. You can tell that big executives don't really know what to do as we wait on the percentage of that tariff that's going to hit markets. Yes, we do know that the 10% baseline is in, but those reciprocal tariffs, we're still waiting for that August 1st deadline. Let's move over to the Fed. And how concerned are you about the Fed's independence? We saw equities and the dollar taking a dip earlier this week following talks of Jay Powell getting fired. Trump, of course, backpedaling, then saying it's highly unlikely that will actually happen.
Look, I mean, monetary independence is of critical importance. I mean, if South Africa or any emerging market for that matter did something similar to that, we would be branded as a banana republic, right? So, obviously the United States rules, I guess, are slightly different to them since they are the superpower of the world. But it's certainly not good to see, the words the blows that's been thrown, I guess, over the course of the year. Now, argument can be made that interest rates are perhaps too high in the United States. But the Fed's perspective is, well, we don't know what the impact on inflation is. And that is why we've got this pretty much doing nothing at the moment. But in a way, I also think from a Trump administration perspective, if they do underperform expectations, they probably would like to keep Jerome Powell there so they can have someone to blame.
Yeah.
Where if he is replaced earlier, then he's got no one to blame if the economy underperforms. So I just still think it's a low probability event that they will probably look to dismiss Jerome Powell before his term ends, which I think is roughly May next year. But you never know. We did see this, call it in Trump testing it in the market, see what the reaction would be by discussing it, and as you can imagine, it wasn't well taken.
And just on interest rates, we do have that Fed meeting coming up in the next week or so. On the back of that, on the back of the inflation numbers we've also seen, are you pricing in a rate cut at this month's meeting, or perhaps at September's meeting?
Yeah, I'll probably think more in line of September side of the equation, but quite difficult to time, of course, interest rates. I think it's more likely it will come down, call it over the next year, and the question, of course, answers the question is to what extent.
Yeah.
Will it be 50 basis points, 100 basis points? And the same in South Africa, of course, right? So interest rates are expected to come down in South Africa, but perhaps will remain a bit more sticky than it should be because the Reserve Bank is targeting a lower inflation rate. So, yeah, I think interest rate policy will remain top of mind of investors for the rest of the year.
Let's bring it back home. News has been quite slim, but we do have that G20 finance meeting, which is ongoing. I think it wraps up today. We know that U.S. Treasury Secretary not in attendance, but U.S. reps are there. Is this something you've been watching? I've noticed that it hasn't had any impact on equities or the rand as well.
Yeah, so certainly the fact that South Africa is not engaging fruitfully with the United States is a problem. So Scott Bessent, Marco Rubio, and Trump has been relatively hostile towards South Africa. We'll see if they change their tone as the G20 meeting happens later on. Of course, we don't even have ambassador to the United States at the moment, so we can't even have those discussions behind closed doors. So certainly we haven't seen the progress I think that we'd like to see. If you think from a US strategic perspective, they probably need to invest more in Southern Africa. So in my view, it will be probably to their benefit to do more business, particularly with South Africa and the southern part of Africa. But unfortunately, we're not having that diplomacy at the moment. So it is a concern to me, yes, because I think South Africa, we cannot afford to alienate the West or the East. We pretty much need to be neutral with everyone because we need all the help we can get.
Okay, let's move over to some of the company news out today. Valterra warning of lower earnings, pointing to a range of issues, including downbeat PGM sales. Just your analysis on that update, Alex.
Yeah, look, I mean, the market wasn't expecting a good update, but this one was certainly worse than that we expected. Certainly the production numbers weren't great, but it was obviously affected by the floods, right? So we have to be cognizant of that. I think on a positive perspective is they are guiding for much better production going forward. And we know, of course, the PGM basket price is, I think, over 20% higher currently than it was in this reported set of results. So there will certainly be much better results from Valterra and the PGM sector as a whole in the next 6 to 12 months. But, this was certainly not a great update from operation perspective.
All right, let's get your stock pick before I let you go.
Yes, I'm going for Argent, which is a stock that's pretty poorly covered by the South African institutional market due to its small size and illiquidity. But we think it's offering extraordinary opportunity at the moment. So pretty much trading at a PE of about 5.5 or cash PE of about 4 times. And a free cash flow yield close to 20% in our calculations. So very, very cheap. But I think what you need to remember is that Argent, about 72% of the business is offshore related. So it's completely diversified away from its South African industrial base. And that business actually is very profitable, very high ROEs, and we think it deserves a much higher rating from a sum of the parts perspective. But also more importantly, the management agrees with us because they are going to do share buybacks going forward. So we think this is a opportunity for those that have got smaller funds, specifically retail investors, that can pick up a very unique rand hedge opportunity here at a very, very attractive valuation.
All right, Alex, we'll catch up with you again in the next few minutes for Stockwatch. Thank you so much for joining us this afternoon. That was Alex Duys from Umthombo Wealth.